All right, guys, Lululemon. So this is a deeper dive. How deep we go just depends on our conversation. Mo and I have not looked at the stock ahead of time and, well, too much. I haven't looked at all. We sit there and we literally go through the 10K, the 8 pillars, product review, bear, bull case, and then stock analyzer tool, literally live. Now, is this deeper dive mean it's the full dive? No. It all depends on the size of the company. The bigger the company, the more we believe it has staying power, the more likely we are to do a higher level view. You know, we did a review last week where the review was ended very quickly because we're like, listen, pass on this. And that's what we want you to see. We want you to see it live and in person. That way you can see us get our exact reactions as we go on. So let's pull up Lululemon in our software. I'm going to log in real quick.
To me, this is a company where I know for a fact, looking at $368 and their PE ratio of 5-year PE of 67. I know it's going to not be in our value, but when I pick these companies, it's companies that I want to eventually own.
Yeah.
And this is one that I want to own. So it's just a matter of when.
So the company's been around since 1998, has 29,000 employees. It went public, looks like right before the financial crisis. Mm-hmm. It's up 2,500% since it went public. This year to date, it is down 5%. That's pretty steady.
Pretty steady for what it's better in the market.
Yeah. You know, Mo says he wants to own this company. I'm much more of, so I'm not a huge fan of Lulu. I do think they make nice products.
I think they make nice pants and pullovers and jackets. Everything else sucks.
Sucks.
Their shirts are the worst.
Really?
They're just, there's no form fitting to them. They're flimsy. There's no shape. I just personally like tighter clothes, and they don't offer that.
Okay. So,
very passionate about that.
To me, I'm not thoroughly convinced Lulu is a staying power. Could it be? Absolutely. I mean, $7.2 billion in revenue is pretty solid. And you look at a company like Nike. What does Nike do in revenue? So that's a good question to ask. That'll help us feel.
I think Lulu does have staying power.
They might, by the way, they very well might, but it's something that's really jumped up a lot.
Yeah.
Nike does in revenue $47 billion. So they're about 1/7 the size, 15% the size of Nike. Okay. Now, it's a totally different, it's not the same apples to apples. Yeah. So before you Lulu lovebirds start attacking me, luckily only 4 or 5% of our viewers are female, or else I'd be getting attacked like crazy here. And if you want to attack me anyhow, go ahead.
Take a guess how many pairs of black Lulu leggings Nicole has.
Oh, well, Nicole's insane.
I know she is. Just take a guess.
15.
68.
No. How is that even possible?
I don't know. But I walked in her closet one time and I saw them and I was like, what are these? She literally has a rack that they have in the store, 2 of them, filled with black leggings from Lulu.
Are they the exact leggings?
Exact leggings. I was like, man, you really don't like to do laundry, do you?
Well, that's the reason why I buy multiples of clothes, because I don't want to do laundry very often. All right. So like Mo said, okay, let's look at, wow, return on invested capital is very high.
Yeah, it's extremely high.
5 years, 23.8%. Our goal is 9. Okay, no dividends, understandable. Oh, look at this. Market cap, 47 billion. Enterprise value, 48. Yeah, so very little debt. Let's actually go look at the balance sheet really quick. So their balance sheet here, 2.4 billion in current assets. Now I want, but I want to make note. Inventory is 1.5 of that.
So yes.
That's got to be discounted.
Correct.
Unless the inventory, wait a second. What's the gross margin on their product? Is the inventory is on the books for what they're, okay. Listen, the conservative investor would discount this 50%, saying if Lulu went under, it would hurt the brand, so they're ready to discount, blah, 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 blah. I don't know. So, go ahead.
No, you go ahead. Finish your thought.
Total liabilities,
yeah,
2.06.
Exactly.
That's awesome.
Yeah. On the cash flow statement, looking at their change in inventories, what is this? What 100 million, 133 million, 150 million, and then
$1 billion?
$1 billion.
Yeah. So that's the question you have to ask yourself. Like, go into 10K and figure out that. And that's a big jump right there. And guess what? That drastically affected their cash flow.
Yeah. Oh, yes, exactly.
Cash from operations plummeted.
When I looked at their cash from operations and I was like, what happened there? There's your inventory issue.
So I would exclude that year unless it's but I'd also exclude the year before where it was this like random big year. So overall, maybe the average 5-year average free cash flow is around 300 million.
Yeah, I think it's a pretty safe number.
The market cap of $47 billion. Okay, I immediately think to myself, wait a second, that's a big difference.
Yeah.
That's a really big difference. Let's go to the 8 pillars here. Okay, cash flow fell, as we know, so we can eliminate that essentially. But again, it's just, and the worst part is the free cash flow number is less than. Now, are they building factories that drive down the free cash flow? I don't know. Oh, well, it's this 1 year free cash flow number. That's why. Forget it. Yep. Well, no, actually, no. Oh, because it was $1 billion. Okay. Guys, first off, this drives me nuts. Why the F are they buying back shares?
I know. Actually, the more companies now we're looking at that are kind of not the same ones over and over, I just keep looking and saying, why are these companies buying back all these shares?
Well, because it's a very easy thing to manipulate. Guys, let me explain this, because this is something very important. It's really important that a company does not buy expensive shares, but here's why they do it. It's an easy way to drive up earnings per share and manipulate that number to drive up the stock price. So think about it this way. If a company makes $100 a year and they have 100 shares, that's $1 per share. If you're going to pay 15 times, the stock is 15 bucks, right? $100 a year divided by 100 shares is $1 per share in profit. If you pay a 15 PE, the stock is $15. Very simple. Now, let's say you buy back half the shares. Get out of 50. Now earnings per share is 2 times 15. You've driven the price up to 30. Now, if you have an executive team that's being paid based on the stock price going up, no matter what the stock price is currently, they're going to go buy it like crazy. Even if the stock's overpriced, going, we have the extra cash flow.
And that's probably why you see a lot of these companies for 20 years just buy back shares consistently.
And this is why when I look at company management, that's the thing I'm looking at.
Yeah.
Are they buying back expensive shares? To me, if they are, it's hard for me to trust that. You know, we looked at Sleep Number recently, and I like their buyback of shares. And then my friend Gary said, well, Paul, but look, they only buy back shares when the stock is high. And I'm like, wait, what? And sure enough, 3 days later, the stock started to fall. And they said, we're done buying back shares. It's like, wait, what? Yeah. This is when you should be buying back shares, you idiots. Yeah. So that's the big thing. Yeah. All right, Mo, let's pull up the 10K here, which is on our software. So I'm going to go to the metrics page. One of the things I want to look at is they have stores.
Yeah. So stores and online. I mean, they have a great app, to be honest with you, but their stores are more boutique-y. So
yes. So I'm going to look up same store sales. You look up the online sales. Okay. So it's all of this. So here's the total number of stores. January 31st of 2021, they had 521. January 30th of 2022, they had 574. So they've opened more stores. United States has seen a little bit of the growth, big growth in People's Republic of China, where those communists really love their stuff.
Their leggings.
So I'm not finding comparable store.
I'm not finding online. I'm finding their direct-to-consumer. That's the majority of. They don't have a lot of.
That's online probably, right? Direct consumer would be online.
Then
What's the growth? So show us the numbers there, Mo.
So 2020, they did 2.3 billion direct to consumer. In 2021, 2.8 billion direct to consumer. And then their company operated stores, 1.6 billion in 2020. Obviously that was COVID. And then they had a massive jump to 2.8 billion in stores. That was a massive jump. But stores were closed. What are you making that face for?
We believe total comparable sales and comparable store sales on a full year basis are not currently representative of the underlying trends of our business. We do not believe these full year metrics are currently useful to investors in understanding performance. Therefore, we've not included these metrics in our discussion.
Okay, that's interesting. Haven't seen that in 10K yet.
Now, show me where do you see a store sales?
Let's go to.
What percentage of sales was from online?
In 2021, 2.77 billion.
So about a third.
Yep. Total revenue is 6.25 billion.
Huh. This really bothers me. Just for the record, this really bothers me.
I'm going to go back to a previous 10K.
Let me give a story. In 2008-9, the real estate market crashed. I went to Vegas on a trip with a friend of mine. I decided to look at houses. So the realtor there took me around the houses. As we're driving around, he said to me, you know, I manage too. I said, oh, he's like, yeah, so I'd love to be able to talk to you about property management when you, if you decide to buy some homes. I said, okay. I said, well, tell me, like, first high level. And no one metric can answer itself, et cetera. So I said to him, what vacancy do you run on the other properties that you manage? He said, I don't really look at vacancy. And I immediately said, we're done here. The fact that he didn't offer me well, here's why I don't look at vacancy. He just sat there and said, I don't really look at vacancy. To me, that's somebody who's hiding something. What are they hiding here? Well, they're obviously hiding because guess what? You're telling me if this number wasn't up 50%,
Oh, they tell you
they
all
wouldn't
day.
they wouldn't
brag
tell
about
you.
it. Yeah.
So the question is, Mo, let me go to the past.
Yeah, I'm in the 2020 10K.
Type in comparable sales. What is it saying? Increasing 9%.
So they said it.
They announced it then in 19.
Yep, in 19.
Oh boy.
Direct to consumer net revenue is growing 35%.
Okay.
All right.
So what else do we have to look for in this? Oh, let me look at return on invested capital. Let's see if they're willing to.
You do that, I'll look at the bull and bears, what they're saying. So there are a lot of factors there. So bull and bear, there are a lot of factors to
Are
be
you kidding me,
excited
Mo?
about. What?
They don't offer it.
Really? Why are they so shady?
So guys, the reason I'm looking at, you might sit there and say, well, Paul, you have return on invested capital here. I'm like, yeah, but return on invested capital, the unfortunate part is it can be calculated in so many different ways, and every company might calculate it different. I just want to see how they look at it. I'm not even seeing it here. What else would they call it? ROIC, return on invested.
Maybe just type in capital and see what comes up.
Good call. Okay.
Lululemon is big amongst the kids.
Are they?
Against the teens, yeah. So Piper Sandler's did a survey and they came in third, ranking behind Nike and who else? I can't believe they're looking at Nike as a rival.
Oh, do they really?
Yeah, I mean they don't even make shoes.
No,
they
I
do now.
So guys, we're gonna do more of the bear bull cases and stock analyzer tool. I'm out.
Yeah.
Like to me, I look at it going.
Honestly, this is like McDonald's for me. That was
the one.
I was not expecting this.
I'm out because to me, why are you hiding what your same store sales are? Why are you not telling me what your calculated return on invested capital would be? And I look at the valuation metrics here. I look at I look at this going, how could it? So before we go any further, we're going to do a bear and bull case and then stock analyzer tool to determine the price to pay. But let's show Mo went to the Lululemon store. He did a little product review. So here it is.
What's up, guys? We're inside of Lululemon right now. So this is the pant corner. This is my favorite thing. I have almost every single one of these pairs. I haven't tried these kind of ultra tech pants, but this is a great product. Also, come over here. These are some of my favorite. I mean, the quality of their clothing. It is, how much is this? $150, but I would legit pay $150 for this stuff. It lasts forever. It washes really well. Some of their hoodies I've gotten into a little bit here and there. Their vests, I think I have like 3 vests or something. The one thing I don't like about them is their t-shirts. They're a little bit flimsy for me. They're not form-fitting enough. This is a golf shirt, but let's go over here. Back up with me, Nicole. But these, there's not enough form to them. That's why I don't like them. But everything else about this brand, I mean, it's incredible. Lululemon, they're expensive for a reason. I'd pay the price for them. As far as the clothing goes, I don't know about the stock.
All right, thanks, Josephine. So we're back to the bear and bull case. So the bear cases, they're not forthcoming on data.
Not forthcoming on data. They have a lot of competition in the space.
The valuation metrics are insane.
Absolutely insane. I mean, if I look at this and I'm just going to guess what's going to come out of Stock Analyzer, it's going to be sub 100. Somewhere
That's my guess.
50 and 100, somewhere in there.
Now, the bull cases, a lot of growth potential.
Yeah, a lot of growth potential.
5-year return on invested capital, very high.
They have a very big name. I mean, if they're comparing them up here with Nike and Under Armour.
Who's they?
This article came out from, this is from Motley Fool, but they did this, Piper Sandler did this taking stock with teens survey of the Gen Z.
Oh.
I don't know what came out. I don't know.
Listen, it's an expensive brand.
But people were in it.
It's an expensive brand.
When I think about yoga, I just think it's synonymous with Lululemon and Range Rovers and Yorkies. But Lululemon.
All right.
You know?
Here's analyst EPS estimates on our website, going all the way down to 16 analysts. Over double EPS in the next 5 years. Revenue, you can see this chart of revenue. It's starting to decline. It's growth. As you can see right here, almost double revenue. Okay. So that's, this is to me, the bear case for me on Lulu is very expensive, a lot of competition, decent margin, good gross margin. But the valuation is just awful.
All right, let's run it through Stock Analyzer.
Okay.
So I'm going to do a 10-year analysis here.
I'm going to do a 10-year analysis as well.
Okay.
Free cash flow is so low.
Okay.
Dun, 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 dun.
$370 a share right now.
The low was like 250. All right, Mo, tell me your assumptions.
All right, revenue growth 3, 5, and 7.
Wow, I did 6, 9, and 12.
Okay. Profit margin 13, 15, 17.
The 12, 13 and a half, 15.
All right. Free cash flow margin 6, 8, and 10.
7, 8, 9.
PE 13, 15, 17.
Same.
Price to free cash flow the same.
Yeah, even though their free cash flow has been lagging. I want to figure out why their free cash flow is lagging. Like, what are they spending? What are their capital expenditures like focused on that are allowing them to grow it? And then your return.
13, 15, 17.
I did 12, 14, 16.
Okay.
I have it on my watch list at 150.
I have it on my watch at 175.
Okay.
What's your numbers?
60 to 100.
Okay.
High side 100 to 170. Remember, guys, the cash flow margin was a lot lower and middle price of 80 to 130.
I'm 128 to 75, 40 to 80, and 55 to 100.
So you know what I'm going to do here, guys? I had it on my watch list at 150. Rare occasion, I'm decreasing my watch list number.
Yes.
I'm taking it down to 120. And here's why.
I think that's fair.
I don't like the fact that I'm hoping that by the time it hits 120, I can get more information about their same store sales. Not reporting that really bothers me.
I have not seen that in any video that we've done.
By the way,
any retail space we've done, even people that reported bad same store sales, they just said, okay, it's bad, but this was the reason why. Not just, hey, we're not reporting it because we don't think it's true. A true representation. That's weird.
So guys, if you like this, subscribe to our channel. And secondly, our software over here with our thousands of people in our community who are talking, who can chat about this company every day. You can join risk-free for 1 month. Sign up in 1 month if you don't like it, which I don't understand why you wouldn't like it. Email us. We'll give you your money back. No questions asked. Thank you very much for your time. There are 3 things that you absolutely need in order to be a successful investor: the proper mindset, the proper emotion, and the proper process. Which ones are the most important?